Hey everyone, it's Evan here from the Trade Risk on Tuesday, December 12th, here with a midweek market recap video. We're going to cover all of the major markets, the current market environment, and then finish off looking at some sector analysis. Today's video, we're going to be discussing the S&P 500 breaking to new all-time highs. It's now up 5 days in a row. We're going to discuss that. We also have the small caps, the Russell 2000, which are showing some relative weakness. They started last week. We mentioned it on Friday's video, continuing into this week, acting a little bit sluggish. So we're going to talk about those two things and more right now. All right, we'll jump in here with the S&P 500 with the SPY ETF. You can see we closed up 49 cents today. That's 18 basis points to the upside. Not quite the strongest close. You can see we kind of poked our head up, tried to get above 267, failed, closed off of those highs just a little bit, but still good enough for all-time closing highs here in the S&P 500. That's constructive. If we go to the weekly chart, you can see once again here that we are starting to break above last week's highs. That's a constructive sign. We're up 0.5% so far in the week. It's only Tuesday, but so far so good. We had a bit of a wider range last week where we tested all the way down to about 263, sub 263 last week, and right now we're about 3 or 4 points higher. We still have the 8 and 20 period extending away. Momentum is actually still growing here on the weekly chart. So for you intermediate term holders there, that's still constructive developments going on that longer term time frame. If we kind of dial back here and look at this daily chart, you can see once again we're up 5 days in a row. So last Wednesday was the ultimate low here. We had just a slight, we're up 5 pennies on the day. It was still an up day. We followed through on Thursday, on Friday, yesterday on Monday, and again today. So here we are again, back at all-time highs in the S&P 500. The trend for 2017 continues to extend itself up and to the right. Once again, you can see, again, looking at momentum in some of these fast-moving averages, the 8-period EMA, that light blue line on my chart, is still accelerating away from the 20-period EMA. That's a sign of momentum and strength. That price is accelerating to the upside. So very clearly here, bulls are very much in control in the S&P 500 on multiple time frames. Now, it's early on the week. We want to see a strong close on the week. So ideally, coming into Friday or heading into Friday, we make a close above this 266.50 level. We hold on to the gains that we made and we close strong. That would be the absolute most bullish scenario there for the bulls right now. If in fact we do kind of reject around here and fall back into this range, giving us kind of this upward tail on the weekly chart, that would be a bit more of a sort of a pessimistic look, not necessarily a doomsday look, just a pessimistic look that maybe means we need to move sideways just a little bit. But keep in mind, of course, that the trend is higher. So on all time frames, pretty much right now. So we have to respect that and sort of view this as, consolidation or sideways movement within the context of an uptrend, if in fact we do see that reversal and we start to pull back. Right now, it's basically been nothing but bullish action here in the S&P 500. If we go to the IWM, it's a slightly different story. We started to notice the relative underperformance last week. This was actually down 1% on the week. Last week, we saw the S&P 500 up. The Qs, I believe, finished up a bit. So we did note that sort of underperformance, and so far this week, we're down right now about 35 basis points, while the S&P 500 is up about 0.5%. So when we look at this daily chart in the IWM, I still am of the belief that 150, this general area here, this yellow line on my chart, is an important area to hold. It was last week's lows, and more importantly, it was resistance. It was the upper end of some of this chop and the rally here in September, which ultimately gave us or set us on the path of about a 5 or 6 week consolidation in this, October to early to late November, really, and then following which we broke out and then pulled back to. So for now, it is still, I think, hanging on here, basically on the skin of its teeth above this 150 level. We did retest it last week. We saw this little initial pop, but it didn't get quite that far. Meanwhile, the S&P 500 last Wednesday got the pop, and then it just continued higher, and it's making new highs. You see the opposite happening here. We have the Russell, which got a small pop, and then is very quickly kind of fading back down to that initial retest level. So I think that's sort of the high stakes level to be paying attention to going forward. Same thing on the weekly close. We want to make sure ideally we are above 150, and even better, we are above these series of prior couple of day highs here. That would be ultimately the bullish scenario for the bulls. It's an interesting spot here if you're someone that likes to buy on support, buy on dips, buy on retracements. This is a market, again, you'd want to be paying attention to, because while it is underperforming right now, we know this market is sort of masterful in its rotation. So we want to keep an eye on the IWM, and if it can suddenly start to take out some of these prior highs right at these moving averages and this prior resistance level, that could give you a good sort of entry tactical tight risk and play for a trade back up to these prior highs here. Might just set you up for something like that. Again, we still need to see the evidence that bulls are actually going to step in here. Right now, it's a little bit dicey, so let's give it some more time. Keep an eye on effectively today's highs, yesterday's highs, this basic cluster right here, right around 152 or so. So that's the Russell 2000. And then we have the Qs, which are now sort of in the middle ground here. They're not quite at the lows like the IWM is from last week's lows. They're not making new highs like the S&P 500, but they are starting to make some progress, looking like they might want to get back up here and retest these highs around 156.60 or so. I think the ranges here are pretty clear. 156.60, 152 on the downside. We're in the top kind of 3/4 of this range right now, and I think this prior, again, highs here is the interesting level to pay attention to. Do we get back up there? Can we break through it? Do we reject there? And then again, do we need more time to kind of move sideways here into the end of the year for the NASDAQ 100? Those are questions that we're asking and clues we're looking for as we basically continue on with this week. So that's the market environment overall. Really not a whole lot has changed. Bulls arguably are still just dominating across the board right now. If we start to see the Russell 2000 break some support, if the S&P 500 rejects at those highs where it is, those would be bearish developments. Those might get you to tighten up some risk or potentially put on some more tactical short trades or opportunities. But until that happens, and if that happens, we want to sort of respect the context of the uptrend and just manage and keep an eye on those support levels that are currently underneath price. So that's the market environment overall for the broad indices. Let's take a look at some of the other major markets. We got TLT here, which saw a nice reversal today. It is still down a bit on the week, about 0.25%. And you can see again this same kind of context, same idea here that I've been talking about for a little bit now. Is it's just really in this messy area. We wanted to see it kind of escape above this 127.50 level and get some momentum and start to cleanly trend for us to be really sort of excited and optimistic about TLT. It could never really do that. Just a ton of back and forth in here, and it's mostly again just kind of in this sideways chop with a slight upward bias there. You can see the 8 and 20 period are still rising, or the 20 period, I'm sorry, the 8 period is not rising anymore. The 20 period, let's see, just barely rising, or it's basically flattened out entirely. So you got a little bit of suspect there. If we can get some follow through to the upside, that again would be a save by the bulls. But for now, to me, just not that interesting. The weekly chart looks like a headache. The daily, just the same. So I'm pretty much avoiding it, waiting for some clearer directional movement to happen. For oil, USO here was down 1.38%. On the week right now, it's down about 0.5%. So it started off on a nice positive note, gave some of that back this week. You can see again, this is at the 20 period as well, sold off just underneath the 8 period, that blue line on my chart, still above the 20, kind of in a, it's certainly in a consolidation right now, a bit of a wait and see. The short and intermediate term trend is higher here in USO, so we want to potentially give that the benefit of the doubt to the bulls right now. but you could definitely see that this is just consolidating, making some higher highs, but now starting to make some lower highs as well. So did I say that correctly? I said it fast. Higher lows and lower highs. So we just got that consolidation, that compression. Let's see which way that ends up resolving itself into the end of this week. Natural gas, tough shape here. Nothing new, right? This trend we talked about should be basically awarded the benefit of the doubt to the downside. The sellers are in control with momentum that has built to the downside. We talked about that on Friday's video. It's down 3.6% today. It's quite stretched, right? This is going to have some violent bounces along the way. All sort of bear markets do, or bear trend moves do like this. So if you're tactical, you could probably find some volatility and some intraday opportunities, maybe overnight, one-day holds. But for me, for that longer term structure, everything is kind of broken here. No interest in trying to pick a bottom here until there's some more evidence that we are ready to bounce, or some buyers are stepping in, or at some bigger climax. And I'm not quite seeing that here in natural gas, so I'd want to avoid or be on that tactical short side. Metals, let's look at those here. We saw a little bit of a reversal in GLD today. You can see it is still down on the week. It's below the 8 and 20 period weekly moving averages, which are now above price and heading lower. That's a bearish thing, bearish development. And same thing on the daily chart. You can see the 8 and 20 period also bearishly aligned and above price. So we're getting a little bit of a kind of reversion to the mean here after being a bit stretched and selling off for 5 or 6 consecutive days in a row. Maybe get another day or two of bounce, maybe back up to this 119 level. But same thing with natural gas. Got to be careful here. The sellers have control of this market, so the benefit goes to them. If you're playing in this for short-term bounces, I hope you're tactical, managing that risk appropriately. If we look at silver next, silver here also saw a rebound today. It's been beaten up harder than gold, really. It fell from this consolidation up here around $16, fell about 1.5 points to the downside. It's reverting a bit here. It appears to be based on today's action. And you can see once again, sellers in control. Maybe gets another day or two to the upside, but you got to be tactical here if you're going to be playing in these sort of opportunities that are really getting beaten up. So that's gold, that's metals. I think those are all the major markets that I wanted to cover. If we look at some of the other sectors, let's start on the positive side. We'll look at financials, which saw a nice move to the upside, breaking to new highs, 1%. So really trying to lead the market to the upside, taking out the highs here from the beginning of December. This trend looks good. The momentum is still there, and bulls are basically dominating here in the XLF after cooling off for about a week or so, checking back to this 8-period moving average, and now you can see us breaking back out. So financials are looking very strong. Healthcare also strong today, up 40 basis points, but still on the top of the relative strength list. And if we kind of zoom out here and we look at the structure, you can see it's back up to the upper end of this range here. It's a little bit of a loose, kind of sloppy range. We got the highs that it made back here in mid-October. It's trying to get back up there and re-challenge them, and also take out the highs here from December the 4th. So for now, short-term trend is higher here in XLV, and keep an eye on the upper end of this range for a reaction basically at those old highs. So those are really the only two standouts I wanted to bring to your attention. On the downside, it's the same two we talked about in our Friday video. We have semiconductors that are still in a very vulnerable spot. Remember, we talked about this market here on Friday, about this kind of actionable reversal signal. We had a gap up into some of these declining moving averages, and we sold off and closed on the lows. Said, you know, if you're real tactical, that's probably an actionable short signal for you. And so far, we're seeing that play itself out. We had an inside day yesterday, and now we're resolving lower. So it looks like semiconductors want to come back down here and retest the lows from Wednesday. Bearish aligned moving averages, the trend line break from really the mid-November. on this day. So really we have, really we have sellers in control in this market, and you want to be cautious here, not trying to pick bottoms. You want to be tactical if you're trading this intraday or looking for overnight holds, but sellers have the benefit of the doubt. And XLU, which we also talked about, and Friday is the weaker sector. We talked about this series of lower lows and lower highs developing, and look at what happened today. We saw 2% to the downside, heavy volume coming back down and closing at new lows here for the past 30 or 40 days or so. So some bearish developments there. If we see follow through below 55, that would be even more ugly, at least in the short term. Once again, I still want to bring your attention to that weekly chart, which has a rising 20-period moving average. We're now below the 8-period EMA on the weekly chart, and you can see we're getting close to this structure here from September, around $55. But this trend is up here on that bigger time frame. So just understand what you're fighting if you are trying to short this in here, or if you are playing for some momentum to the downside. Not saying it can't work, just saying you need to understand that bigger picture always helps keep that context in mind. So I think that is all I had for today's video. Hopefully you guys are off to a good start trading. Thanks so much for watching. If you're new here, do subscribe to our YouTube channel if you like the video updates a couple of times a week, keep you up to date with what's going on in the markets. Thanks again for watching, and talk to you again on Friday.